actually the idea emanated from our own experiences as an investment banker and investor respectively, and not just Southeast Asia. It was both India and Southeast Asia. If you kind of look at it from a banker's perspective, every other part of a bank seemed to have been disrupted by technology, except the part of the bank that I worked in, which is in private transactions. Most founders, most companies that I advised as a banker were managing captables and ESOPs in an old-fashioned way, not so organized, no systems. And so this was ripe for disruption, in the sense that technology could actually play a huge role in improving efficiency. So that was the perspective that I had. All of this while the market the target market for a product like this was flourishing. There were 90,000 startups between India and Southeast Asia. The private market was going to, at some point reach $1 trillion in the next 5 years. And this presented a huge opportunity. Lakshman had investors' perspective as well on this, and I let him add that.
I've been an investor for more than 10 plus years before starting on Qapita. So what I saw particularly in the private market, which is where I was investing, where I invested more than 25 startups, is that the time from the decision making to the closure of the transaction was too long, particularly because there was a lot of information asymmetry and this lack of systems to manage or trade this ownership. And from a ESOP perspective, first ESOP was being only offered to the top management, or if there's a company of 200 people, the top 5 or 10 people used to get the ESOP. And even them, they were not valuing that, because people did not treating it as a paper, because there was no visibility on what would be the value and when exactly will the liquidity be there, sort of thing. So it was a massive problem in terms of the liquidity in the private markets, which I saw.
I think people don't know how to value ESOPs, and I'm one person who was there in an unlisted company for over 11 years and didn't really see the value till there was an exit, right? And that's kind of what opened my eyes to the wealth creation that can happen through equities, right? And now I also find it challenging to show the value of our ESOPs to our developers, right? So it's a problem that I can relate to as well.
We felt if we build rails for the private markets, we can actually increase the efficiency for the overall market and actually make every equity owner count, including employees.
Qapita is a little different in the sense that it's Singapore headquartered, and the founding team, a couple of members of the founding team, Ravi and Lakshman, they live in Singapore, and they have, significant, team, composition based out of Singapore. One of the founders is in India, Hyderabad. That's where a lot of the development happens. If you really look at private markets, let's look at all the unicorns and sunicorns in India. Of course, froth will disappear or is disappearing, and so valuations will get adjusted. But if you look at a couple of $100 million, $1 billion, right, is the total valuation of these unicorns. And your public markets are, maybe $1.5 trillion, right? So your private markets are like almost 25-30% the size of the public market, right? So even your private markets require a solution. And there were global players like Tata, and we've been looking for a local player. And we believe very strongly that they should not just be India-based, right? They should really look at this entire region, because Southeast Asia, Indonesia is very thriving, and many other, Vietnam and Philippines, and there are many other jurisdictions or ecosystems that will evolve. So we felt that a company that's positioned to take advantage of this entire region could grow as big as some of these players in North America. That was one of the key theses for us.
So you can broadly think of the business in two parts: Qapita Equity Management System and Qapita Marketplace. Qapita Equity Management System largely serves private companies as well as listed companies for managing their captables and ESOPs. For private companies, both captables and ESOPs. For listed companies, around ESOPs. In addition to this business has add-on services on the platform, which would be related to plan design, ESOP advisory, as well as valuation services related to the ESOPs. This is all productized, so software plays a huge role in enabling these services. On the Qapita marketplace side, this is intended to be a platform on top of the equity management system. This is where participants can trade in unlisted securities, and this will start with liquidity programs for employees, buybacks that companies do of ESOPs, but will also include secondaries, which is basically how angel investors and early investors in private companies can trade ownership in a systematic manner. So two parts of the business: equity management, which is a software platform, and a marketplace, which is where people can trade ownership.
If you really look at startups, right? When we talk about private companies, of course, the emphasis is a lot more on startups, that are venture capital funded or private equity funded. They have kind of a life cycle of their own. They evolve over a period of time. And so there are multiple rounds of financing, right? And mostly institution-led. An average, a decent company in today's time and age raises at least $25 million, right? And some of them hundreds of millions of dollars, but $25 to $50 million. So multiple rounds, a seed round, series A, B, C, whatever, prior to going IPO or exiting. Now, there are few things that are very necessary or that kind of are very helpful, right, for the founders and the founding CEOs and even the investors. One is, how do you really do the cap table management? The capitalization table is not simple anymore. You have all kinds of instruments. You've got safe notes, you've got convertibles, you've got bridge financing, you've got preferred equity, compulsorily convertible, sometimes optionally convertible, debt. So when you really look at all kinds of instruments, venture debt, to raise capital, how do you manage the complexity of that cap table, right? If you look at all the stakeholders, importantly the founders, and then the investors, and even eventually the employees. So that's one key component. The other piece is the entire, ESOP, stock option, right, management. Right. You got to plan the stock options, and then you have to implement the plan, and you have to execute on an ongoing basis. As companies tend to grow, they have products and customers, revenues, and new rounds of financing. The value of that equity also grows, and that's one of the key attractive components. A lot of really good employees, who are in the startup, are in the startup for 2-3 reasons. One is they love the product or the problem product a startup is creating and the problem startup is solving. And two, they love the people who are doing it. And three, they know that the value creation will happen and they will also get to be part of that value creation, right? A piece of it they can accrue themselves. So stock options are very important components, right, in retaining and motivating, right, your team. So that the life cycle management of stock options is very, very complex. And when you bring in, compliance and even tax, you're assigned ESOPs kind of, at a par value, and eventually your equity is much, much more valuable. Then how do you deal with that, right? So the second component is really, or the layer is ESOP management. And the third piece is liquidity. Liquidity becomes very important. Of course, a startup may exit completely. It could be a strategic acquisition, or it could be a partial exit. It could be a public listing. But if you leave those, a complete exit or an IPO, the secondary exits and certain amount of liquidity is necessary for the founders, the employees, and even the angel investors, other investors, right? Today, that's kind of done in a bit of fragmented fashion. But these are three important things for private companies: cap table management, ESOP management, and liquidity. So that's what you kind of look at as an operating system from equity management, and that's what Qapita is building, and that's what Qapita's vision is, and that's what we really liked. We're glad to be part of the journey.
You can think of us as a SaaS net play, as the software is creating the network and the marketplace is sitting on top. So if you have to put it in one elegant sentence, it will be come for the tool and stay for the exchange.
To me, I think it kind of straddles both boundaries. By the way, it was very interesting. So the way I connected even with Ravi, it was a LinkedIn conversation that was going on, and Ravi's interest was the founder CEO's interest was to get our portfolio onto Qapita, right? And and I was very interested looking for a similar solution. So first meeting itself, I just told Ravi that, look, Ravi, I really love what you're building and I want to invest in this company. And he was really surprised. He said, great, I came to sell and have you as a customer. And if you want to even join as an investor, that'd be great. And so we really liked that conversation. So to me, I think, the key question is eventually, how do they coexist, right? You can't force fit and say, oh, I'll derive 50% revenue from here and 50% here, right? It may be 2/3, 1/3, or it may be, 75-25, right? Time will tell. But there is a recurring revenue component, right? So ongoing basis, you'll use cap table piece. Ongoing basis, you'll use ESOP management piece, right? And then there's liquidity. And even before liquidity, there are many offers within ESOPs. Sometimes if you have vested ESOPs, founders want to, borrow certain amount of money against vested, shares, right? That's an offering that you could offer. That's purely a marketplace kind of an approach at that point of time. So it straddles both the SaaS and the Fintech boundary, but we're pretty happy. We'll see how it evolves and kind of where it fits.
So as we are building for the world from India and Singapore, and we first want to solve the problem in India and Southeast Asia before we expand to the other parts of the world, say Middle East or to the Western markets. With respect to the details of operations, without getting too much into the specifics, but we can share the following: that current team, we are around 100-member team, to be specific, around 110. And we currently serve more than 750 private companies. The business manages a cap table value of $50 billion and ESOP programs, which are currently valued around more than $5 billion. And I think before the end of this year, we will be around 250 people, 1,200 private companies and 100 listed companies. And we expect to manage over $12 billion of ESOP. We currently have customers primarily in India and Singapore, but we also have few customers in Indonesia, Malaysia, Australia, and Philippines. And we actively plan to expand in the other Southeast Asian countries in the next 12 months. And we also expect to transact over $15 million in unlisted securities in over 50 plus companies by end of this year.
In 3 to 5 years' time, if we comprehensively solve for this problem, there should be a multifold of owners in the private ecosystem. The number of owners should increase in the ecosystem, which means more employees should be able to get a share of the pie of ownership. Today, it is not easy to create this ownership. People also don't believe in that asset class as an employee because there is no liquidity available. That is one. Second, if you see that the number of people who create wealth from this asset class should also increase as a result of this operating system being created. If you see more value gets created in a private company before it gets listed, and then then after it's listed, and this has been a structural shift globally, and that same shift has happened in these markets, in regional markets as well. So when we build this, that this should enable a greater distributed wealth creation from the private markets, and that will be a greater than business objective that would have been achieved.
The metrics, the health metrics that we look at are the number of companies, quality companies that sign up as customers, number of them subscribing to each of these offerings, right? Which is captable, ESOP management. Exchange is just beginning to happen. It'll grow significantly in the next couple of years. And we believe that, there will be a leader. And it'll be like a 60-40 or a 50-50. Don't know how the revenue split would be, right? Time will tell, but so far so good. Like I said, several hundred customers who have raised, maybe tens of billions of dollars, and they're managing ESOPs worth billions of dollars, right? And the liquidity piece is just beginning to happen. In 18-24 months, it'll scale. At that point of time, you are that infrastructure component that private companies care about, and then you're able to deliver value and accrue value for yourself.
From my perspective, it is fundraise and ability to attract and retain people. At the end of the day, if we build a good team and we have sufficient runway, it's a complex problem and we can back ourselves to solve it. So fundraising and ability to attract and retain talent keeps me awake.
I think from my perspective, looking at the two business segments, in the equity management perspective, I think what keeps me awake is that there's a lot of many features to be built because this is a very comprehensive problem to solve, and to solve it comprehensively, many features to be built. And from a marketplace and a liquidity perspective, it's a very big problem. Few people have tried earlier and could not solve it because they were trying to solve it with mostly through people. So we are trying to solve it through tech. So we are being pioneers both in this space and also in this region.
I think what keeps me awake is probably what's keeping most CTOs awake. It's hiring talented engineers and retaining them. It's extremely challenging at this point in time. The other thing I would say is delivering features as fast as possible. So it's a product velocity. Maintaining that velocity is very critical for us, and also prioritizing the functionalities to build the right things first.
A very rich network in the ecosystem, which is we are a network FX play. So from my perspective, that was the biggest value add.
And I think I can think of India as has one of the big networks both in India and also from a US perspective and from the overseas investors and overseas ecosystem perspective. Very solid network in the ecosystem, both domestic and international.
Yeah, I would add that India is also, it also has a very founder-friendly approach and a very high empathy factor. It's always a pleasure, working with Satish.